everybody, to our weekly webinar series, survival webinar series for dentists. And we're looking at part 2. Last week we talked about clearing the confusion. Today is part 2, clearing the confusion, part 2. And we have an additional coach on our call, so let me introduce everybody we have here today. So as always, we have Eric Guzzardo, also Dental Academy's head instructor. He's also a Dawson Academy professor. He's one of the most talented speakers and content creators in dentistry. That's why we grabbed him. And wonderful human being. So we're so glad to have him. And I learned recently he's apparently a bit of a, there we go. He has some perfect timing. He's also a bit of a guru here or master genius in the background of studying these policies, a policymaker, which is always a benefit. So we're so happy and grateful to have Eric Guzzardo. We have Robyn Reis, also Dental Academy's VP of Coaching. She is also a Ben Erickson senior consultant. So that means that she's amazing at HR and hiring, and she also helps our dentists hire team members. So that's something she does, as well as an amazing coach. And she also, besides having a lot of coaching experiences and also having experience running multiple location offices as an operations manager. And she's also unofficial, wonderful therapist too. Not legally a therapist, but she's great to talk to in situations. And then Eric Vickery, one of our longest standing coaches, he is a specialist when it comes to just KPI, numbers, analysis, seasoned coach, amazing coach, great phone skills all around, works a lot with our fee-for-service docs. And another also surprising thing too with Eric is another kind of savant when it comes to reading these detailed provisions and things that we'll be getting into government policy. And I'm the lawyer in the room, and I feel overshadowed by these apparently laymen compared to the lawyer experience. So it's
now I know why you're not a lawyer, because if I had to read one more of these have not, therefore, should be, but not really kinds of things. But
you know what's very interesting? When I graduated, there was a new, which I think y'all can appreciate, in law school, they're teaching lawyers now, in my time as well, that not to write like that. They're looking more for plain, clear writing versus using the therefore, however, where, thou, and pursuant. That's a big one, pursuant too. So anyways, welcome everybody. Those are our kind of introductions, and I want to hear from the team. I'm gonna man the Q&A. So if you have any questions, there's a Q&A box. There's also a chat feature, but the Q&A is easier for me to notate. But we're gonna have Larry, Rob, and Eric just kind of give us an update on what's going on. There's a lot of changes. And maybe Larry, you can lead us off, because you sent every few days, he sends us a great summary of the law and what's going on. And I put that in the student center for the members. So give us an update.
I wanted to take everybody's temperature, because I'm wondering now if people are running into the squeeze of having to take their PPP loan too soon before they're ready to actually use it. And so now they may start to wonder, do I really want the PPP? And is there anything else that's available to me? And that's why I just wrote about the employee retention credit.
Payment, this is just for those who are familiar, they should be. This is the paycheck protection provision.
We were all encouraged, number one, to file for the economic injury disaster loan.
Okay, that's one area. Mm-hmm.
And to use those funds while you're shut down to pay other operating expenses. Then we were all encouraged to file for a payroll protection program. Eric calls that a P3. It's probably easier than a PPP, but to file for the P3. And I agreed with all of this. The EDIL, that was great. It's a low interest loan. You know, it also came with that $10,000 grant. Then, of course, they changed the rules after everybody applied, and they didn't like how many people applied. So now, instead of it having a $10,000 grant, it will only provide a grant up to $1,000 per employee, up to $10,000. So if you're like a typical staff of 5 or maybe 6 in your office, your grant will only be $5,000 or $6,000, and the maximum amount of the loan would only be $15,000. So for most people, they're going to get maybe $20 or maybe $21,000 from the government. 5 or 6 of that would be a grant. The rest of it you would pay back. It's for operating expenses. It's a very, very small amount of money. Almost, I'm glad to have it, but it's really not going to help me. So, and that money could be spent on anything that you wanted to spend. So that's why I like the idea of the EIDL loan, so that you could pay other operating expenses. Then we encouraged everybody to file for the payroll protection plan. This is for when you reopen, so that you could pay your staff once you reopened, and they were going to reimburse you for, or they were going to forgive 2 months of payroll. Well, this is great. While you're shut down, your employees are on unemployment. You have the EIDL loan to help you pay any other operating expenses that you might have while you're shut down. It was a very low interest loan, repaid over a long period of time. Very, very good. Unemployment is good. The feds bolstered the unemployment by adding another $600 on top of what the states were going to pay. Fantastic. Our employees were going to be well compensated. In some cases, they might have even gotten more than they were going to make when they were working. But that's okay. These are extenuating circumstances. We'll let you do that. And then once you started, you would have your PPP loan. And originally, you could file for your PPP loan. You could have up to 60 days to activate it. So great. In 60 days, we'll have a better idea of when you're reopening. See, this is April. So April's gone, May's gone. But oh boy, if we open around somewhere around June, you know what I mean? You've got this 60-day leeway. Well, no. Once the banks got involved, they said, we're not hanging on to loans for 60 days. If you apply for it, if it gets approved, if it's accepted, we're funding it, you're taking it. So it went from hopefully having the flexibility of about 60 days squished down to about 10 days. Well, if you just applied for this loan and you get it next week, you're not open this month. And there's a real good chance you won't be open next month either. So, but the banks are saying, no, you have to take this loan. I sound a little bit worked up about it. It's because initially I thought they really came up with some great plans and that it really was going to help us. Now I feel like they've got our head in a vice for no other reason than the Treasury just doesn't want to either keep funding this plan or give us the flexibility to use it when we need it, instead of taking it now when it's not necessary. So if you're one of these people who applied like you were encouraged to do, and oh my gosh, well, got the loan already. We're very, very surprised by that. But now the banker is saying, we're not going to give you 60 days to decide whether you want to fund it or not. We're only going to give you about 10 days because that's about how long it's going to take to get it approved and get the money. You got to take it. So now you've got money that, well, it's a low interest loan, but it's got to be paid back in 24 months. And so if I can't get it forgiven, why do I need this loan? It's not going to do me any good. So you're kind of in a quandary. I could take it and I could spend it on, paying myself. I could pay my mortgage interest, or I could pay my rent. That's forgivable. I could pay benefits and things like that, healthcare premiums. Those things are forgivable. But the biggest portion of that loan that's forgivable is the payroll expense. And so you're not going to have any payroll, obviously, because you're not open. So you're in a quandary. Do I take this loan only to have very little of it forgivable, and the majority of it I've got to pay back within the next 24 months? I don't need this. So now there is the employee retention credit that's not as generous as the P3. It's not as generous, but it has a substantial benefit of up to 50% for each one of your employees, up to $10,000. So if the person makes $10,000 within a quarter, you're eligible for a credit up to 50% of that, which would be $5,000. So if you're an office of, say, 5 employees, each quarter where your receipts are less than 50% of the same quarter last year, you could file for a credit. So in an office of 5, you would get $25,000 credit off of your 941. And you could probably do that in the third quarter when we start up again. And you might be able to do it in the fourth quarter, but as soon as your receipts go above 80%, then they say, no, you're not in distress anymore, and so you can't have the credit. But if your receipts are less than 50% in the third quarter, then you're eligible for the credit again. So for a typical office, this is about $50,000 in tax credits that they would give you. Not as great as the PPP, but not bad at all. And so it's just a matter of how quickly your practice gets back on its feet and how quickly the receipts come up to, where they were. So it's
so you're actually introducing a new, I call it kind of dealing with the confusion, but you're adding a new element here, the retention credit, which I did hear about this. So you're saying that if your receipts are less than 80%, so if you come back at less than 80%, less than 50%.
Right.
So if you're less than 50%, you get a credit of 50% of your payroll?
Mm-hmm. Up to $10,000 per employee. So it's essentially it's $5,000 per employee.
Tough. Yeah, Eric, you're shaking your head. You don't like
how
this.
Can you, if you're making 50% of what you normally make, how are you even paying your people to get the 50%?
And how do you pay operating costs?
Right. And, well, I'm not saying that I like this. The PPP is the
you
better
might get
option.
some of this. Yeah, you might get some of this because you've had to pay your team during this time, and you can show the loss. There's lots of things that are going to come out new. The Tax Cuts and Jobs Act of 2017, they're pulling that back out, and you can actually refile your taxes for the last 5 years and show losses in comparison to that to get tax credit back. Your CPA should be helping you amend your tax returns to help.
Say that again. You can amend your tax returns?
Mm-hmm. Yeah, for the last 5 years. So you can look at comparisons for loss and say, we lost money in comparison to your best years. I'm not an accountant. I don't know how it all works, but you need to talk with your CPA and say, hey, I'll give everybody time to write this down. I want to know the Tax Cuts and Jobs Act of 2017, TCJA. How is that going to help me right now for tax credit? That may be something along the lines with what Larry's talking about. When you start looking at these things saying, I just got off the phone with a client, they're moving. He's paying his team this whole time. He's closed. He's moving locations. So he's going to have this tax credit when it's all said and done. So there are some people who are going to fall in this category and say, I'm going to get a $5,000 tax credit up to for each of these team members, July 30th, whatever that is, and ongoing. So
in there are certain situations.
Not to cut you off, Eric. Yeah. I mean, Alex, we didn't talk about the tax credit before because the P3 was perfect. And that's what we really wanted everybody to do. And then when they came along with the stipulation where they're playing hardball and we're not going to give you any leeway that you have to take the loan whether it is going to help you or not. Now the tax credit is the next thing.
Two questions with the loan. So number one, if you take the loan, I have a question from the audience too. If you take the loan and you use it for payroll, meaning you bring your people back, that will be forgiving in a time frame, but they can't go back on unemployment if this continues longer, right? That's one problem. The other question is,
that keeps getting debated, and I hope Robyn could jump in on that. Right. That could change. Every state's different, but you got to work 2 quarters and earn so much money. And how are they going to do that in a short window of 8 weeks? Will they qualify that they're in? Nobody really knows the answer to that. That's a risk you got to say, I'm willing to take.
It's a risk.
Why take them off unemployment just because you were given some money right now? Keep them on unemployment. The only person who's losing at that point is the doctor, anybody who makes more than $1,000 a week.
Well, let me just ask you this, and then we hear from Robyn with that, is if you take the PPP, let's say you get it, and you don't use it on payroll, you just say, I'm just going to pay it right back, or even I'm going to take it and wait, and then I have the money, and if it's going to get bad, I continue unemployment, and I just say, can I just pay it all back in a couple months?
Reject it. Yeah,
but let's say I got the money. The money's transferred. Yep. I'm getting interest. And I say, I'm not going to qualify. 3 months later, here's the money plus 3%. No big deal.
Right,
you can do that? No
The
penalty?
problem is what we wanted for our clients and all the listeners is we wanted them to be able to get a tax credit.
Yeah.
We wanted them to get this loan forgiven. We wanted them to actually be able to help their employees and get relief at the same time. And so, yeah,
Right.
they could take the loan and just pay it back, but it's not doing you it. It's not providing you with the relief that this was intended to provide you with.
And we talked about this on Friday, Alex, with everyone, was if you can keep your team on unemployment and not access your PPP funds, even though I had a client on Friday, they got the funding, so they had 10 days. So they have till the 20th, right? Well, from the 10th to the 20th, their 8 week starts April 20th. They're not coming back. They're shelter in place. They can't come back. But we're not going to reject the money. We're just not going to spend all the money in 8 weeks. So we were talking about, well, how can we get caught up on hygiene? Well, we're going to work more hours than we normally would. We're going to add Fridays. That means overtime. Well, government's paying for overtime. That's okay. We're going to get caught up on the government's dollar. And so we're going to spend the 8 weeks of payroll in a 6 week time frame by working harder for 6 weeks. So we'll still spend the money, but just delay and keep them on unemployment. Again, the only person who loses while we're all on unemployment is anyone who's making more than $1,000 per week.
So if you get the money, Eric, you got the money, it's in your account. You're on time. You're taking the clock's on. Yeah. You have 8 weeks to spend it from that point, correct?
Yeah, but you don't have to start spending it now.
You don't. But what you're saying, I could wait 2 weeks and then come back and do extra capacity.
Yes.
Really
spend the money.
8 weeks.
I don't know if you know this, Alex, but I can spend some money. I know how to spend money. And especially if it's somebody else's money, we can figure out how to do that. So,
but aren't you going to get into overtime essentially?
Yeah, you'll get into overtime, but PPP's there to pay for it, right? I'm not paying for it.
But again, that just wasn't, that's a good strategy. That wasn't the intention. That's not what we wanted for everybody.
But the other concern
right.
But the other concern is that, and there's some talk, we're not sure, but as of now, there is talk that if you don't go and apply for PPP, triple P,
you're not going to
call it 3P, that if you don't apply, it's going to run out.
Yeah, it was at 205 billion on Monday, and they were talking about 50 billion a day, and they're only going to 349. So that meant by tomorrow or Friday, the money's absorbed. That's why they're talking about adding the 249 billion more, but they can't agree on what's going to be in that added money. They want to include.
Now, what does it mean? So a lot of people have already applied. They've been submitting forms. That means they're
counting
in.
That. They're counting that. I think
they're counting that. Okay.
Yeah, that's accounted for. It's just not approved yet.
It hasn't been distributed.
Yeah.
Okay.
Until you start hearing banks say, "Hey, we're not taking more applications," which I have heard, you should be in line to.
But so is your recommendation apply, and then even if you have to give it back because you'll just use unemployment instead?
Yeah, but you're not at a loss if you don't take it. Like, let's say you get approved, but you never go back. You keep your team on employment, and you were approved for $100,000. You can just say, "I'm paying my $100,000 back with $100,000 back. Here you go."
So you got the money. What you mean pay back? What you mean by don't take the money is no, you take the money, but you don't use it for payroll. You give it back with a little bit of interest.
There's no interest for 6 months.
No interest for 6 months. So you give the money back.
Dollar for dollar,
there's no prepayment penalty. What was asked. Yeah. And at least you were in the system. But I guess what you're saying is what you all are saying is the risk is unemployment is going to be, if you're not working, why
why bring it back? Why take them off? And that's, I think, to get looking for loopholes with Larry here. It's like
loophole Larry. I like that.
Yeah, we wanted to find the 8 week window. Well, just hold off on payroll. And here's the best part of that, Alex, is if you don't spend all that money in that 6 weeks or that 4 weeks, and let's say you've got $40,000 left on the other end. Well, you might say, I want $40,000 at 0% for 6 months and 1% for the next 18 months, right? At 20,000, it was $250. So at 40,000, it's $500 to keep $40,000. Okay. You got to pay it back in the time frame, but now you've got capital to work with, and there are no limitations on how you use that money. It's a loan. So you want to pay off high interest loans that you had before, or debt, or you want to buy equipment, or now you got to go spend a fortune on PPEs now, universal precautions, whatever that money can be used for, you should be considering.
So there's still a benefit, even if you're getting the loan and you thought you're going to use it for payroll, it's still low interest and can be used for other things.
As long as you can afford that monthly payment in 2 years.
Right. And And or you just take another loan to pay that off, right? Why not? Robyn, so with respect to getting back on, and again, it will vary state to state, but instead of to come back, if you were to do this and bring people back, and then, we're trying to work, but again, government says, can't do it. You tried, you can't do it. Can they get back on unemployment?
Great question. I don't know.
Okay.
And that remains to be seen. The extraordinary steps they took to relax some restrictions from unemployment for the COVID-19 situation. I'd like to believe that there'd be some leniency if that were to happen, if it was again driven by the government to open up business and then close it back down. To do that, I don't know. Eric mentioned before that there are states that say once you come off unemployment, you have to work a set amount of period of time before you'll be eligible again. Yes, there's a benefit period. It's usually 12 months, but they're paying attention to that. Yes, they've also extended traditionally unemployment. I think most states are 26 weeks. They extended it for another 13 weeks, so 39 weeks total. Again, that's only for now, for the time being, depending on when businesses are able to open. But I don't have a definitive answer. I don't think anybody has a definitive answer just yet.
Until we hear otherwise.
Right.
Yeah, because it sounds to me.
Risk it. Right.
It sounds to me the ethical position and the safest position, because it isn't necessarily the dentist that will get in trouble by doing this. It puts your team at risk because they can't apply again under the under the traditional rules unless it is changed, which it very, very well may be.
Right. We don't know yet.
But probably the ethical and maybe even quasi-legal stance would be safest stance. Apply for PPP, triple P, 3P. What do you call it, Eric? You call it 3P, triple 3? What do you call it? Okay, PPP. You apply for that, and almost like you down with PPP. You remember that? So you get that, and you apply for it. Take the money, okay? Because there's concern about this is a strategic move. What I'm hearing, if I'm wrong, I'm simplifying it for everybody here. So you apply. People are furloughed, unemployment. Go for the PPP. Get the money. They give it to you. Wait as long as you can. Get it funded. Okay. If there is an ability to open, you use it for payroll. If not, you use it for something else and pay it back. Now, Eric, Larry, still, again, I take the money. Let's just say I get it in a couple of weeks, and I don't use it for payroll for the first month. But the second month I use for payroll, I get that portion covered, right?
Yes, you could pay yourself. You can pay your health insurance premiums.
Okay.
If there's an employer contribution for your 401k, you could pay that. Those things are all forgivable.
So the team can be on unemployment, and I can pay myself or my partner or associate, whatever. I can pay with that.
But again, I guess my issue is why I'm getting so worked up is that always was forgivable. The bulk of what you're going to get forgiven is your staff payroll, and you wanted to and I'm going to get over this. You wanted to have this money available so that when you reopen, you have money to reopen and pay your staff.
Get going.
And so the whole notion that I have to play these games, you know what I mean, to spend the money that I don't need to spend it right now. Everybody could be on unemployment. So,
and this is actually Triple P is actually for people who are actually open right now and paying their employees, but their business is suffering. That's what this is really built for. It's not built for us who are shut down and on unemployment.
It's more for the specialists that are the endodontists probably.
Well, think about any business that's open right now, a restaurant.
Sure.
It's for a restaurant that's open. They can't make the money they were making before, and they have people working because they have to be open. It's those types of business that it was built for.
Or they could even be possible for the retention credit too, Larry, right? For a business like that's open. But
well, you can't have both.
I know you can't have both, but I'm saying they could have a choice between the PPP or retention.
Right,
retention can actually last a little longer, because if you're down 50% continuously.
For a longer period of time. Yeah, hopefully not.
Hopefully you won't. Most, I think, you might be below 50% when they first opened. Maybe
March might have been where we were like that too, because if you consider the time frame we were open, it started to dissipate. you saw emergencies.
Right,
You were
but it goes quarter by quarter.
Yeah. So January, yeah, that's going to be really hard to qualify for on the 50% part.
Well, here's an interesting question, and I don't, probably the answer is we don't know, but I wonder is anything about Jordana, one of our members was asking about, if you do if the people are on unemployment, is your unemployment going to skyrocket now? Because
no.
Yeah, a lot of states are saying no. Again, they're going to waive their traditional calculation.
Good.
However, I know Illinois.
Don't however. Therefore,
we're going to,
because they exceeded their dollar amount. They were ready to Iowa, Illinois. A couple of those Midwest states said unless and so this might be another one of the stimulus packages. The federal government says we're going to start funding your state unemployment now too, not just the 600, but your weekly max. We're going to have to fund that because there's so many people on unemployment. So.
I mean, it's not going to skyrocket to the sense where you think it might. You are going to see an increase. Again, some of the states did say it's going to show up, not as dramatic as it would if it were under normal situations, but somebody's going to have to,
I guess somebody has to pay for it. I mean, it might be everybody's unemployment goes up, period, because the state's now been, they raided the bank, and so somebody's got to put it back. And
they shouldn't have been spending it before. We've all been paying into it for all this time. So
yeah.
There's a question on here that I have the same question. If you get the EIDL, $1,000 per employee, let's say I have 8 employees, I get $8,000 now, and I haven't seen anybody get that money yet, but maybe there's people getting that already.
I know one person that did.
Okay. So let's say they got okay, good. So they got the $8,000. Can I use that however I want, knowing that I also applied for Triple P and that EIDL money gets absorbed into that? Does that mean the same rules now apply for the EIDL spending as the Triple P?
The way I understood it was that the grant portion of it would be deducted from the forgivable portion on the other side, but there were no restrictions on how that money could be spent.
That's the part I'm not clear on. Okay.
I've not heard that either, that there were restrictions on it.
Mm-hmm. Yeah. Because you're just going to get you're going to get $8,000 less on whatever you were going to get from the Triple P. So if you were going to get $90,000, you're going to get $82,000 now. So I thought, well, maybe that makes the same rules now apply for that money since they're under the same umbrella of Triple P now in order to be forgiven. So I would ask your bank that question. And I've also heard that how are banks going to track how we spend this? And there's going to be an application, a certification on the other end of the 8 weeks that says how you spent the money.
I call it the forgiveness return.
Yeah.
We haven't seen that, but you're going to have to file a return where you're actually going to have to list, here was my rent, here was my utilities, so on and so forth.
So you better track it really well.
Yes. But again, in dentistry, I feel like our clients, we go by the book. We don't have 2 sets of books.
Mm-hmm.
We don't do things cash. So we have receipts and, records of everything that we spent. Because some clients were thinking like, oh, we heard that we needed to open up a separate bank account. I would say if this was going to go on for a year, that would be a good way to do it. But this is only 2 months. You pay everything by check or credit card. You have a receipt. And it's only a few items. It's just payroll, health insurance, 401k, mortgage interest or rent, utilities. It's just a few items. You've got record of all of this. So because I have not heard banks say we want everybody to open up another account, because that means they're opening up hundreds of new bank accounts now to fund these. I haven't heard a bank say this.
Yeah.
I've just heard, but I feel I've been telling my own clients, I see the way that you keep records. It's very clear where you've spent your money. We argue about it every quarter. So, you know what I mean? So I said, you have the information. So I believe that you'll be able to complete the return quite easily. But that, yes, there'll be what I call a forgiveness return.
Yeah. At the other end.
It's going to be some kind of return.
Separate account. My son's a bank teller. He's in college and he's like, we're opening so many accounts now. Everybody's opening an account because they have to put that money in that new account. So lots of questions on here.
Yeah, and I want to thank Eric. Has been answering a lot. I appreciate that help with those.
He can type and talk. I can't do that.
Yeah.
So what of these questions, Alex? Which ones haven't we answered yet?
A lot. But I mean, we're covering. I mean, we're covering the generic.
Here's one that was sent in by Christine, just saying, she, husband, dentist, wife, CPA, business manager team, work on the business stuff. Can we take salary once funded, right? So once you get the money, your 8 weeks has started. So you don't have to start paying everybody at the same time. I have a client who knows that hygiene's not going to come back right away. So he's having the hygienist stay on unemployment while he slowly starts to bring people back over those 8 weeks. So if you wanted to pay that your max was $8,333 to an employee, sure, that's part of the wages, and include your malpractice, include your.
So you can have some people, and you can have some people on unemployment, some people you're using for PPP. You
just have to hire the same number of people back by June 30th. Yeah. Correct. If you had 9 employees before February, then you have to have 9 employees before June 30th.
All right. So if you use, so by June 30th, all of them have to be back. Otherwise, it is not forgivable. So if we're doing a little bit of unemployment, a little bit of this, by June 30th, they're not back.
Everybody.
Not forgivable.
You got to get right.
Everybody's got to be back in the door by June 30th. Yeah.
Unless something changes, of course.
Yeah.
So here's a question. So I know the application can be submitted by June 30th since the program's open, the PPP is open till June 30th. Does that mean technically my business isn't open yet, I'm getting near to the end of that application period, say June 28th, I can hire everybody back and submit my application for PPP, right?
But will there be any money left when you apply?
Well, right, and I understand.
Right. You're right. If the program still exists, then, but for probably, yes, you probably could.
Yeah, you could. In theory, you could. And if they add the $249 billion to this, if they can, government can agree, then it's going to last another 3 weeks. This started April 2nd. The money's gone by April 19th, so almost lasted 3 weeks. And sole proprietors and 1099s were allowed to apply Friday.
Right, the 10th. Right. Yep.
Yeah. So, yeah. I mean, that was hey, well, I don't want my 8 weeks to start now. I'm going to wait to apply. Well, you're going to miss out completely then. So you might as well go get it, and then use what you can. Keep them on unemployment as long as you can. And if you were approved for 100 and you spent 50, you got $50,000 for free.
Yes, if you got a chance to spend it. So we're still kind of giving the same advice. Go ahead and apply for it. We're still hoping that the application might take a couple of weeks. All of this has happened much faster than any of us could have anticipated, but it still may take a couple of weeks for the application to be approved and funded. So it may be 10, 15 days more down the road if you're just applying for it now. There was a question, somebody applied to 2 lenders. My sense is that would be dangerous because you can only have one of these loans. And so if you know what I mean, it could disqualify both of them.
Reject the second. If one gets approved, immediately reject the second one. Like as soon as you see anything, or if you can contact, I don't know how in contact you are.
Now, I guess strategically also, couldn't you keep your people on or do PPP, and then if you get PPP until that, I mean, again, it's a time frame until they would end of June, then you put them on unemployment after that.
Well, have they been on unemployment already?
No, let's say they're not on unemployment.
Oh,
I mean,
okay.
It might be too late, but I mean.
Well, that's fine, but the supercharged unemployment ends July 30th, so you're only going to get 4 weeks of the extra 600. So you might as well take those 4 weeks now. You know they can be on unemployment now. You know they're going to get the extra 600 now. Keep them on unemployment as long as you can. You know, if let's say that's $800 or $900 a week, right? And you've got, let's just do even numbers, $1,000 a week per employee on unemployment, okay? And you've got, I don't know, 8 employees. That's $8,000 a week that you're going to get for 8 weeks. That's $64,000. So if you look at your PPP money and say they were going to give me $80,000, wow, I'll take the $80,000. I'll get as much as the $64,000 I can on unemployment, and then I'm going to start using my $80,000 maybe 4 weeks into my PPP. I'll still use a lot of it. Don't feel like you have to use all of the money. But you definitely need to use all of the unemployment you can, because you're not back to work yet. You don't have cash flow.
Right.
And I want to say something.
It would be better to have, I agree with Eric, it would be better to have that money available for your own use than to have spent it on something that somebody else was going to pay for you.
Exactly.
I would agree with that.
Stay with unemployment. Here's my soapbox right now, Alex. If any offices have any overdue insurance claims, by the time we get to the other end of this, I'm going to be really upset. Everything should be paid. Plenty of time to be contacting insurance companies.
Yep. Somebody was asking about an associate dentist. If they were on payroll, then yes, they should be included in the triple P request.
Yes, absolutely. Up to $8,333 per month, the $100,000 equivalent per year.
Let's see if we can get through rapid fire through some of these questions, but quick, because we did. If we already covered it, then just say we covered it, and we also did a few other webinars. Because I like to do, let's do rapid fire. Then I want to end for today. Then next week we can do kind of quickly like an update on how things are moving, things that have changed, because it seems like a lot of them are already on this realm. And I'm seeing yesterday, so what we do, everybody who's listening, we have a lot of our members on the call. We have, yesterday was our members only meeting. It's more of a group coaching type session, which is really nice. We talk, people are on we can see them. It's a little more in depth. This is more like, we still go through great information and we're not withholding, you get a lot of information, but it's more of a lectures format. And then we have our Titanium, our mastermind group, which is a smaller group. But what was interesting, and the reason I mentioned that, it's interesting because I'm seeing a trend in our members group that we're starting to want to talk more about marketing, more about the roadmap to recovery type situation, because this is like really this is important. It's technical stuff. We've been over a lot of it. We have a lot of resources on alsodentalacademy.com/survival, and a lot of replays. I did interviews with Robyn and Larry, a lot of great stuff. So I'm thinking next week we might start to move into some of those discussions. So the members on the call next Tuesday, we'll talk more about that. We'll use that as kind of our basis for some agenda items for next week on this webinar call. There's a lot that can be done. So like I said, just my vision is I want to cover some more of this stuff, but a lot of these questions start getting to the point where you have to talk to your CPA. They're very, very specific questions, but there's also some things that I think we're exciting to talk about what you can do. For example, we're talking about this, but what are we doing with our patients? I know Robyn's smiling, she's right. What are we doing with our patients? What are we doing with our employees? How are we training them? What are we doing with making sure, because again, my whole thing is, we talked about this in the very beginning, when we come back to the office, what are we coming back to? Yes, the government and these things might keep us financially okay, but do our team members, do we still have a good relationship with them? What have we been doing with the time with them? And what have we been doing? What type of training are we doing? Obviously, All-Star Dental Academy is great. That's my plug for it. But we can talk about some tactics and things that we're seeing that are really successful. I see teams that were, in our members meeting that they're talking about, they're becoming closer together, they're bonding, they're learning, they're doing some great outreach, they're becoming experts in their community. Because I'll tell you, that really inspired me yesterday talking with the group is like, when things are bad, and there's an article I posted, I believe in the survival part of the website, there's an article from the Harvard Business Review that difficult times bring out the best in people. And I also want to acknowledge all my coaches here on the call and in our groups, like being so generous with their time, helping everybody, right? You see that in difficulty, it's not about what's in it for me, it's about how can I help, right? And the same thing is what I want to move towards with what all of you can do with your patients, with your community. Because yeah, you're not going to make a lot of money on it, but you're going to make an impact on, these are the people, the leaders I'm going to go to. They have my best interest, right? So I'm getting a lot of inside information from my mastermind, our mastermind group guys, right? And our clients, that is really moving the ball. I'm seeing the trend is, okay, we got this. Now what? Now we're furloughed. What do I do with my team? What do I do with my time? How do I position myself for the future? We will come back. It will happen. It's just how long and how well. And by planning, we can reduce some of our suffering and perhaps even be a better team as we come through. So that's my vision for next week, guys. I'll work on the agenda. Okay, quick response. And thank you, Eric. You're clearing out some of these questions. So PPP loan, if not all my team wants to return, can I hire new team members to handle the forgiveness?
Well, so here's why wouldn't they want to return? Because they think they're going to get unemployment when they quit their job. You don't get unemployment when you quit. So I don't know why they wouldn't want to come back. Now, if they're afraid to come back and you're not really open and shelter in place hasn't been lifted, then you've got a problem, not the employee, because you can't force somebody to come back to their job. But in order for you to qualify for PPP money to be forgiven, if you had 9 employees on the application, then by June 30th, you have to have 9 people in.
Good answer.
Doesn't mean you need to bring them all at once, but you got to bring 9 back by
Good
June
answer.
30th.
I like 30 seconds or less answer. So I'm just going to read it. Whoever wants to take it, do it. Okay. If you get the PPP funds, what do you feel about putting the employees back on payroll instead of unemployment, even if the practice is not open or a skeleton crew? Shaking your head.
That we had talked about earlier. You'll have to check with the state.
We talked about it. Okay,
because you probably can't do that.
Well, moving along. If I get an advanced grant or there are restrictions on it, like does it have to be the same situation as PPP using it for payroll?
We talked about that.
We talked about that. Probably not.
Okay. If I get the advanced grant or the I did that already. Thank you. I feel like a robot here. It just happens that I'm right in the middle of a practice transition with closing date on June 1st. Do you think the loan might be assumable, transferable to new owners, even if we have a new LLC?
So
can you transfer the loan? Is it transferable? I don't see why not. It's part of the business. It's not to a new LLC, but the existing LLC.
It's the same name.
You can't transfer. I wouldn't think you can transfer it to a new LLC.
I would ask the question, who applied? Who's actually applying for the loan? Did the LLC apply for the loan, or did the individual dentist apply for the loan?
Whoever's is attached to, I would think. But again, these are some of these are some things you'll talk to your bank and your accountant.
Ask your bank.
Corporate tax cuts. Again, this is accountant questions. Right. Let's see. Malpractice. Can that be used for PPP? No. Okay, good.
Utilities,
so these are fast.
rent.
I love it. What are the best ways strategy to utilize 25% rule on rent, utilities, and payment? Is there a strategy for it? Best way to utilize?
I took Dr. Ricky's spreadsheet and just took the money and over on the right said, all right, you got $100,000, 75% of that. Got to spend 75 on this. And then what's left, don't spend more than that on your utilities.
But really you say spending the money. You're just spending money and they're going to look at what percent of.
If you want it to be forgiven, if you don't want to turn into a loan, don't spend more than 25% on other than payroll expenses, utilities,
25% of what overall expenses?
If you got $100,000, if you got $100,000 given to you, you cannot spend more than $25,000 on rent, utility, mortgage interest, interest from debts incurred before February 15th. So,
but the key point is that 75% has to be
spent on payroll.
On payroll.
So if you get $100,000 and you only spend $50,000 of it.
But how do you know what you're spending on what?
You got to track it. You got to make sure it's in a separate account.
So it has to be in a separate account. It cannot be in your.
No, you just have to keep track of how much you spend.
I would put it in a separate account. Larry's saying if you're really good at tracking, do it. I'm not.
Right,
that
but
good.
Eric's also making clear sense here. If you got $100,000, 75% of it, which is $75,000, has to be spent on payroll.
Okay.
If you spend of what you spend, 75% of that has to be spent on payroll.
Talk to your accountant about the proper. This is an important point because you want to make sure that you follow whatever the rules are of how it has to be separated, so you don't go in a snag. Robyn, you're going to say something?
No, we're talking about if you want it to be forgivable.
If you want it to be forgivable.
Gotcha.
Right. Yes. Spend it right.
Okay.
Somebody says you do not need to rehire all the staff back. Would you get a proportion loan forgiven than not 100%? I think you get 0 forgiven if you don't follow the rules. That's my guess. Larry?
I would agree with that.
Yeah. You got to, if you applied for 9, you got to have 9 back. That doesn't need to be the same 9.
Right. Just has to be 9 people.
You can bring 5 back of the original and 4 on, minimum wage if you want. I don't know.
So a lot of these are getting really specific and it's hard for us to answer without putting ourselves, because we're not giving you official legal advice. We're giving you overall recommendations. We can't go into such great detail because you have to talk to your own state law, your accountant, your lawyer. I mean, this is all, you have to do your own due diligence. We're just giving you kind of our view of overall what's happening from industry experts. But you know what would be very interesting? I'd like you guys to follow up for next week. I want to know from yourselves and other people that are saying, and the provisions, is how to properly account for this. Because if this is not done properly, You're saying a separate account. Larry's saying not necessarily. I want to know what is the standard. I know in real estate and in law, you have what's called an escrow account, so you don't commingle funds. I don't know if this is treated the same way, but if it is, I want to see what it is.
This has to do with accounting.
The bank will determine it.
Right. The only reason why I said you don't need a separate account is because if you pay a utility bill every month, and so you have a bill and you have a check that you paid the bill, what difference what account it comes out of? But if you feel like you can't keep track of it unless you have it in a separate account, then get a separate account.
Or the bank may mandate it because they're fearful that they have to help track this. So
well, and if the bank, if the bank tells you that, I just hadn't heard that a bank actually said you must have this.
Yeah, two of them said you have to have a separate account for it, but
maybe they're looking that the checks come from there or something, or your reimbursement. All right, this will be interesting to see because now we're kind of getting into. I'm curious about that, and to, you know, hopefully the banks are advising you again. Read the paperwork, follow the steps that are
right
provided.
now. They're making all the rules.
They're making up as it goes
that
along.
Goes.
Exactly.
Well, they're making up the rules as far as like, do you have to have an account?
Like I said, they're making it up as they go along. Is what I'm saying.
I had a bank tell the borrower, "Okay, you were approved for your $200,000. We require now the underwriter, not the loan officer. The underwriter said we want a 1-to-1 deposit put in for your loan, collateral."
Wow.
Go ahead and put he goes, if I had $200,000, it would be coming to you for the money. That's the dumbest thing I ever heard.
I have to keep a compensating balance.
Put $5,000 in there and tell them to give you your money that you were approved for. This is ridiculous.
Yeah.
Gosh. I mean, you're going to hear all kinds of stuff from banks. They're going to try to do all kinds of stuff because they're at risk now. They're on the hook. If you aren't forgiven for the money and then you default, they're stuck with the loan. So now banks are freaking out. And they're paying 0.5% to get the money too.
So we hope we cleared some more confusion and didn't add confusion.
Jose keeps asking the same question about he applied in 2 places and what's going to happen. Will he get in trouble? Nobody's ever done this before. And so we don't know what's going to happen.
I mean, but this goes back to what Robyn and I were saying for a while. If you're acting in good faith, okay, and you're doing the best that you can, you're going to be fine, most likely. Okay, they're not, because there'll be an uprising. You think you're the only person that applies. I know so many people are applying to every places.
Right, but the complication is how quickly all this is happening, because most banks used to get like maybe 50 loans a month.
And they were taking 4 months to get an application done.
Right. And now, they're getting them done in a matter of days, but they're getting 500 applications a day. You know, and it's and the rules keep changing. So that's part of the problem. That's what's going on here.
Excellent.
So what's the next question? Do we have time for more? No,
I'm just going to stop it here because, again, I don't want to get too much in the weeds and add more confusion, but I think it was a great update. Next week, we'll do another quick update as well on this. But I'm seeing a lot of repetition. And again, a lot of this we covered in detail in the program, and we'll talk more. We'll do an update, but I'd like to start to move a little bit more to what are we doing with our team? What are we doing with our practice so that we're trying to think about not just surviving, but thriving a little bit. Think about cultivating relationships, because we don't want to throw that off the wayside. I know how easy it is for human nature, and dentists specifically, and my father, speaking of a dentist, is on the call. I see him there. He'll agree. It's so easy to kind of get stuck in the detail, and then the team is off. And the teams, love the teams. They're the most important asset you have in your business when trained well. But like anything, ourselves included, you have an individual organism and you have multiple organisms. You don't give them the love and support, they will deteriorate. They will not be on the same wavelength. They will not be where you needed them to be in terms of their level of communication and skill. And listen, guys, we have to be superb on customer service when we get back. We have to have a high level of rapport and empathy when we get back, beyond what we had before, because you're going to have scared people. Okay. You're going to have people look for your leadership and very sensitive. And we have to be prepared and trained and start working on that now. So we get back, we can take great care of our patients, and those patients equal a profitable business. Okay. We won't want to forget that investment. And I'll tell you, the PPP, all these things are great. They're going to get us to survive. But when you look in the long term, the amount of money that's being saved here versus taking care of our team and our patients is minuscule about that's your business. So you have to look at both. So thank you, Eric Vickery. Wonderful. And thank you for taking all those wonderful notes and responding things. Robyn, just a delight, our HR expert, and just this wonderful person. And Larry Guzzardo, brilliance as always. And all of you are wonderful people. And I'm here just enjoying your presence. Oh, very, very impressed. So, and thank you everybody for being on the call. And until next time, you guys all ready? Go out there and be an all-star.
Bye.